Iran and Qatar gas facilities have both been damaged, triggering further pressure on global oil prices.
Does that mean Americans should anticipate spending more on gasoline?
Iran without a nuclear weapon that's going to try and blow up one of our cities or blow up the entire Middle East.
This is a firm warning to those responsible for attacking parts of Iran's fuel and energy infrastructure in the south. In response, the fuel, energy and gas facilities at the source of the attack will be set ablaze and reduced to ashes at the earliest opportunity.
One drone. That is all it took. One Iranian drone striking a water tank at a power plant in Mesaieed Industrial City, and a second hitting an energy facility at Ras Laffan Industrial City, and the world's largest LNG producer went completely dark. On March 2, 2026, QatarEnergy issued a statement confirming it had ceased production of liquefied natural gas and all associated products due to military attacks on its operating facilities in Ras Laffan and Mesaieed. Ceased. Not reduced. Not paused for maintenance. Ceased. The single facility that supplies approximately 20% of all the world's LNG gone dark in a single morning. European benchmark gas prices at the Dutch TTF hub surged nearly 50% in intraday trading. The Asian LNG benchmark JKM rose approximately 39%. Oil jumped 13% intraday to above $82 per barrel, the highest since January 2025. In hours. Before anyone knew how long the shutdown would last. Before anyone knew how bad the damage was. Markets priced in catastrophe immediately, because they understood something that most headlines missed. Qatar is not just a big LNG supplier. Qatar is the backbone of the entire global gas market. And when the backbone snaps, everything attached to it breaks. Before we reveal exactly how 2 Iranian drones wiped out 17% of Qatar's LNG export capacity for 3 to 5 years and caused an estimated $20 billion in lost annual revenue, why QatarEnergy CEO Saad Al-Kaabi said the attack has set the region back 10 to 20 years, and why 2 of 14 LNG trains plus a gas-to-liquids facility will be offline until the end of the decade. How Asian LNG spot prices more than doubled to 3-year highs by March 4th, while India's fertilizer industry and city gas networks scrambled to find alternative supply. Why European gas storage, already at 30% capacity after the harshest winter in years, is now facing a second energy crisis, worse than anything Russia caused after Ukraine. What Wood Mackenzie concluded when they called the damage a fundamental alteration of the global gas market outlook that delays the LNG supply wave by at least 2 years, and why QatarEnergy declared force majeure on buyers in Italy, Belgium, South Korea, and China, meaning those countries' gas contracts are legally void. Subscribe, hit that bell. Because what 2 Iranian drones did to the global gas market on March 2, 2026, is not just an energy story. It is the story of how a single industrial facility, smaller than a mid-sized city, was holding together the energy security of half the planet. And what happens now that it is broken? We connect it right now. Here is what Ras Laffan actually is, and why its shutdown is not a supply disruption, but a civilizational event. QatarEnergy's Ras Laffan complex processes approximately 20% of all global LNG supplies, making it the single largest LNG export terminal on Earth. One facility, 20% of global supply. Nothing else in the world comes close. Qatar supplies 20% of the world's LNG, and with production halted, countries relying on Qatari supply had to immediately scramble for the remaining gas on global markets, driving prices higher with every hour the shutdown continued. Scramble. That word is doing enormous work. When 20% of global supply vanishes simultaneously, there is no orderly market adjustment. There is panic. There is every buyer calling every seller simultaneously. There is gas being bid to prices that make electricity bills triple overnight. Think about what Qatar actually produces from North Field, the world's largest natural gas reservoir shared with Iran. QatarEnergy produces approximately 18.5 billion cubic feet per day of gas from North Dome, enabling the country to supply about a fifth of the world's LNG, 18.5 billion cubic feet per day, every day, flowing into LNG trains, the industrial machinery that supercools natural gas to minus 162 degrees Celsius, shrinks it to 1/600th of its original volume, loads it onto tankers, and ships it to power plants from Tokyo to Rotterdam. 14 of those trains at Ras Laffan, each one a precision-engineered industrial system worth billions, each one irreplaceable on short notice. Iran hit 2 of them directly, and the damage was not cosmetic. QatarEnergy CEO Saad Al-Kaabi told Reuters that 2 of Qatar's 14 LNG trains and one of its 2 gas-to-liquids facilities were damaged in Iranian strikes, with repairs expected to sideline 12.8 million tons of LNG production per year for 3 to 5 years. 12.8 million tons per year for 3 to 5 years. Not weeks, not months, years. Al-Kaabi said the scale of the damage has set the region back 10 to 20 years. The damaged units cost approximately $26 billion to build. $26 billion of infrastructure, destroyed by Iranian drones that cost a fraction of that. And U.S. oil major ExxonMobil, a partner in the damaged facilities holding a 34% stake in LNG train S4 and a 30% stake in train S6, is now counting losses that will run for years. Here is what force majeure actually means, and why the legal declaration is the moment buyers understood how bad this truly was. On March 4th, QatarEnergy declared force majeure on LNG deliveries following the Iranian drone strikes, legally relieving itself of contractual delivery obligations under extraordinary circumstances, initially issued to buyers with cargoes already loaded at Ras Laffan that cannot transit the Strait of Hormuz. Cannot transit Hormuz, because Iran closed that too. On the same day, in the same war. Qatar's LNG could not leave the production facility because it was damaged, and even if tankers were loaded, they could not leave the Gulf because Iran had shut the strait, a double lock, simultaneously. QatarEnergy subsequently declared force majeure on long-term contracts for buyers in Italy, Belgium, South Korea, and China, countries that had signed multi-year supply agreements and built entire energy strategies around guaranteed Qatari gas. Italy, Belgium, South Korea, China, 4 of the most industrially significant economies on Earth, all receiving the same legal notice. The gas you contracted for will not arrive. We are not legally obligated to deliver it. Find another supplier, in a market where every other buyer is making the same frantic phone calls simultaneously. Al-Kaabi said QatarEnergy may have to maintain force majeure on long-term contracts for up to 5 years for supplies bound for those countries. 5 years. The contracts that European and Asian energy ministers built their national energy security plans around, void for up to 5 years. And the CEO of QatarEnergy said 4 words that no energy minister anywhere wanted to hear. For production to restart, first we need hostilities to cease. Cease. The war has to end before the gas comes back, and nobody knows when the war ends. Now look at what happened to prices, and why the numbers tell a story of industrial civilization under pressure. By March 4th, assessed LNG delivery prices to India for first half April had climbed to $23.3 to $23.5 per MMBtu, an increase of roughly $7.80 to $7.90 from the previous session in a single day, one day. $7.80 per MMBtu added in 24 hours. On March 4th, LNG spot prices in Asia more than doubled to 3-year highs, reaching $25.40 per million British thermal units, as QatarEnergy declared force majeure at Ras Laffan, doubled, in days. Rystad Energy estimated that global natural gas prices rose more than 40% in aggregate since the shutdown began. And after Iran hit Ras Laffan a second time on March 18th, causing sizable fires and extensive further damage, Asian LNG spot prices increased by over 140% in weeks from a single industrial complex that the world assumed was untouchable. Think about what these numbers mean at street level. California gasoline prices surged above $5 per gallon during the second week of March 2026. Gas prices at the pump directly connected to LNG prices on the other side of the world. Goldman Sachs said the risk of a U.S. economic downturn over the next 12 months had risen to 30%, driven by the surge in oil and gas prices, with the bank expecting the unemployment rate to rise to 4.6% by the end of 2026 as hiring slows. Unemployment rising in America because 2 Iranian drones hit a gas plant in Qatar. Several firms now see inflation running closer to 3% this year rather than 2%, eroding disposable incomes and weighing on job creation across the global economy. Inflation, jobs, disposable income, all connected by a pipeline of liquefied gas running under the Persian Gulf from a facility that is now on fire. Here is what the damage means for Asia, and why Bangladesh, India, and Pakistan are the countries most exposed to collapse. Approximately 82% of QatarEnergy's long-term contract buyers are located in Asia, meaning the direct supply impact from the shutdown is overwhelmingly felt in Asian markets. 82%. Asia bears the weight. India is among the most exposed. Petronet LNG holds a long-term supply contract for 7.5 million metric tons per year from Ras Laffan, and confirmed it received a force majeure notice from QatarEnergy, subsequently issuing force majeure notices to downstream customers including GAIL, Indian Oil Corporation, and Bharat Petroleum. The notice cascaded. QatarEnergy told Petronet the gas is not coming. Petronet told GAIL, Indian Oil, and Bharat Petroleum the gas is not coming. Each of those companies told the factories, power plants, and fertilizer producers beneath them. A chain of broken contracts spreading downstream from a single Iranian drone strike. In 2025, LNG accounted for 80% of gas demand from India's fertilizer industry and 36% of city gas consumption. And reports indicated India directed industry to cut gas consumption by 10 to 20% following the shutdown. Cut gas consumption by 10 to 20% in India's fertilizer industry, the same industry that produces the fertilizer that grows the food that feeds 1.4 billion people. The British Food Policy Institute warned of long-term increases in food prices due to disruption in fuel and fertilizer markets caused by the conflict. Food prices rising. Because gas prices are rising. Because Qatar's LNG trains are damaged. Because 2 drones flew over Ras Laffan on a Monday morning in March. Here is what the damage means for Europe, and why Dutch TTF prices nearly doubling signals the second energy crisis in 4 years. Europe is expected to suffer a second energy crisis primarily as a result of the suspension of Qatari LNG and the closure of the Strait of Hormuz, with the conflict coinciding with historically low European gas storage levels estimated at just 30% capacity following a harsh 2025 to 2026 winter, causing Dutch TTF gas benchmarks to nearly double to over 60 euros per megawatt hour by mid-March. 30% storage, going into spring, with the Qatari supply gone, with Russian gas already cut after Ukraine, with TTF at 60 euros per megawatt hour, nearly double. A European MEP quoted by BBC's Katja Adler said, "Just like the crisis after Russia's full-scale invasion of Ukraine, different conflict, same European divisions, same dilemmas over energy. We can't keep going around in these circles. Something's got to give. Something has to give. And what is giving right now is the European industrial base. Energy-intensive manufacturing grinding down as power costs make production economically impossible." Wood Mackenzie concluded the attacks on Qatar fundamentally alter the global natural gas market outlook, with market expectations for a short disruption and controlled restart by mid-2026 now appearing increasingly unlikely. Fundamentally alter, not disrupt. Fundamentally alter. The IEA confirmed global LNG supply dropped by 8% year-on-year in March, representing a 20% drop in worldwide supplies, with cumulative LNG losses of approximately 120 billion cubic meters expected for 2026 to 2030, delaying the market-easing LNG supply wave by at least 2 years. At least 2 years. The new LNG projects that were supposed to ease the global supply crunch, delayed because the market they were built to serve is already broken. One thing is absolutely certain. On March 2, 2026, Iranian drones struck Ras Laffan Industrial City and Mesaieed Industrial City, forcing QatarEnergy to immediately cease all LNG production. European gas prices surged nearly 50% in intraday trading. Asian LNG benchmarks rose 39% on day 1. QatarEnergy CEO Saad Al-Kaabi confirmed 17% of Qatar's LNG export capacity, 12.8 million tons per year, was knocked out for 3 to 5 years. The damaged infrastructure cost $26 billion to build. ExxonMobil holds significant stakes in both damaged LNG trains. Force majeure was declared on contracts with buyers in Italy, Belgium, South Korea, and China. India's Petronet received the force majeure notice and cascaded it down to GAIL, Indian Oil, and Bharat Petroleum. India directed industry to cut gas consumption 10 to 20%. Asian LNG spot prices more than doubled by March 4th and rose 140% after the second attack on March 18th. European gas storage stood at just 30% heading into spring. Dutch TTF benchmarks nearly doubled to 60 euros per megawatt hour. Goldman Sachs raised recession probability to 30%, and Wood Mackenzie said the global gas market outlook has been fundamentally altered. So here is what happens next. Qatar shared the world's largest gas reservoir with Iran. Israel struck Iran's South Pars field. Iran struck Qatar's Ras Laffan complex in retaliation. 2 drones, 20% of global LNG supply, gone for up to 5 years. The IEA says the LNG supply wave that was supposed to ease global energy prices is now delayed by at least 2 years. Europe enters spring with 30% gas storage. Asia is cutting industrial gas consumption. India's fertilizer production is strained. And QatarEnergy's CEO said those 4 words that define everything. For production to restart, first we need hostilities to cease. The hostilities have not ceased. The gas has not restarted. And the global economy is running the calculation every morning. How many more months can it absorb a 20% LNG supply loss before something structurally breaks? Stay tuned.